This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, welcome back, of course, to Research Talks here from Stockbox with Alan Green. Alan, how are you doing? How's the week been?
It's been a busy week, actually, Mark. Long day in London yesterday, but good productive day. And yes, can't believe we're February the 7th already. Where's the year gone? We're halfway through quarter one almost. It's incredible, isn't it?
Yeah, indeed. Well, time does move on, and you say we're halfway through quarter one. I know that we're going to talk about Nostra Terra Oil and Gas, who by the end of Q1 want to have finished that phase 2 workover program there to get those existing wells over in Texas producing again, getting up to 150 barrels of oil per day with good margins as well, good netbacks there, as we've talked about recently with Paul Welch on the interview. And then, all being well, we'll see. The market doesn't seem to reflect, but they want to obviously go and drill again, and maybe some capital raise will be involved, but a lot will be used, I think, from the cash flows from the producing wells. So, yes, time does move on, but companies hopefully will deliver on their timelines as we move down through the calendar year. So, we're going to talk about Nostra Terra, and of course, we're going to cover a new company, Mobile Streams, that you're going to introduce us to. But I know we're going to kick off with Nostra Terra. So, take it away.
Okay, thanks, Mark. So, Nostra Terra Oil and Gas shares currently trading at 0.36 pence, have been as high as 0.16p on the year, but it's got a market cap of 1.6 million, which is absolutely ridiculous. And as Paul Welch said in the interview with you, there's a complete disconnect between the actual value of the assets and the share price. But we can take the story back to the middle of last year. And of course, really, it was May last year that things really started to move forward. At that point, we noticed there were a lot of shareholders taking positions. You had Dos Hermanos, which of course is run by Jim Newman, who is a director of the company and an exec. Bone Energy, Christian Ainsworth, Premier Miton, all stake building in the company because they appreciated and understood the cash generative nature of the business. And at that point, Paul Welch came in. Paul, of course, former Shell, Hunt Oil, Pioneer Natural Resources, Chariot Oil and Gas, Sea Dragon Energy, SDX Energy. He's got many years of experience and a deep understanding of running an oil and gas company and obviously managing production. And of course, the asset, which everyone knows is the key asset owned by Nostra Terra, is the Pine Mills asset, which is in the Permian Basin in Texas and in East Texas. And the company have developed these over the past few years, and the production during December was pretty impressive. The averaging over 80 barrels of oil per day in December 2024. At the last report, we'd reached 120 barrels a day, but I think it's the margins that are really the real standout here. The company makes approximately $50 or $48.60 profit per barrel, and that's profit after production, after everything, and that's really the number that I think has got these major shareholders perked up and interested. So once phase 2, as you said, Mark, is complete, and that'll be by the end of this month, the current $20,000, $30,000 per month will rise to $100,000 per month, and then with phase 2, with the redevelopment of the Fook well and the other wells the company are looking to drill, that number could double again to $200,000 a month, and so on. But most recently, the company announced it has secured a new banking facility. The banking facility was approved for another 3 years, and they've increased it to $10 million. But the because of the cash generative nature of the company, the aim obviously is to pay this down as soon as possible. And when you're generating £200,000 profit per month, that's pretty that could be done sort of in fairly short order. But also having that facility and having that cash flow does give scope for the company to be able to multiply its operations yet again, so to drill further wells, perhaps to look at other projects in the area, because dotted around Texas there are quite a few private operators that have their own operations, and obviously you get to a point where you've got the equipment, you've got the team in place, and you can develop economies of scale. So Nostra Terra are potentially at a very exciting juncture. However, currently, as Paul said, there is a complete disconnect between the market cap and the value of the company. We know Premier Miton, of course, are a major shareholder. They've over the past month they've increased from 12.5% to 15% to 17%, which of course they currently hold. And Bono Energy Group in the US will also increase their holding as well from up to 3.3%. So everything is in place, and I think the institutions are seeing real value in the company. As often happens with small cap companies, it takes a trigger point perhaps for that value to be realized, or for investors to see the opportunity in the share price. But I know Paul in the interview expressed he was very appreciative of the stance that Gervais Williams at Premier Miton had taken, seeing the company as a value play with that value disconnect. So I think the next few weeks are going to be pretty exciting once we complete that phase 2 workover and we see the revenue start to increase. Then it's going to open up a whole raft of opportunities for Paul on the board to take the company to the next level. But it's a very exciting year in prospect.
Oh, definitely. I think that's definitely the statement to make there. An exciting year in prospect. How that company has sort of turned around with Paul Welch coming in there and just focusing really on getting cash flow in. Obviously, they did the I don't know, what do you want to call it, the re-establishment of the loan, which was due to come up anyway. And it's nice to also see a bank's valuation there. If that's the least we get from it, the terms are basically the same.
Yeah.
But to see a bank sort of put their valuation on it, which was then published in the RNS, and they're always more conservative as well than, of course, the reality. So that was really nice to see that as well. If a bank can back it to those numbers, then the market should value it at least at that, one would think.
It's astonishing, isn't it? You're looking, when you're looking to invest in small caps, you're looking for risk off opportunities, where the risk has been mitigated as much as possible. So you've got validation from a bank who've offered the new facility. They've done their due diligence, looked at the cash flow, looked at the company, like what they see. And banks don't lend easily to micro cap companies in this market. And then you've got the institutional investors, and Premier Miton and Gervais Williams, very high profile, very well known. The fact that they have increased all the way from 7.5% to 17.7%, that speaks volumes for the quality of the operation, and also the prospects for the near term, because as an institution, they want to get a near term result, and that's what they've invested for. But all of the ducks are lined up in a row, I think, nicely for Nostra Terra, and I think Paul and his team have done well to get to this point, and value will always out in the end.
Well, exactly, and you can't deny, can you? Money coming in, invoices being generated, cash going to the bottom line. You can't deny that. So that's what's happening. It should only increase, and a bit of excitement comes, doesn't it, when they do manage to get that sort of drill turning and see if they can, hit a sort of a new sort of untapped well down there, and get some nice flows coming out. So that's your little bit of excitement we can get as well from exploration, which is what we all want, isn't it? So good. Yeah, looking forward to seeing how they go. So mobile streams then, Alan, tell us about this company.
So this is a very interesting company. It's if you look at it as an entity, it's not immediately obvious what the company does, but to coin a phrase, I've drilled down a bit into the operation, and this is a company that generates multiple revenue streams from providing world-class gaming content to an audience globally via a number of platforms. So they've got the heroesnftclub.com and also
Okay.
mobilegaming.com, those platforms. And they also deliver content through long-standing carrier relationships in India, Argentina, and Mexico through their live scores websites. The they have a platform called Streams, and Streams provides a data insight, intelligence, and visualization services. It also provides marketing and optimization tools to support the content business. And through this, they serve enterprise level clients and provide Streams software as a service or SaaS as a self-service platform. And the company is delivering its mission statement is to deliver next generation content, including gaming, esports, and related NFTs to a global audience. So if you take a look at the chart, the shares have traded up to August last year. They were trading at 0.03 of a penny. They've been as high as 0.5 of a p, and they're currently trading at 0.43p. And big jump in activity since August last year. In November, the company announced that it has signed a deal with a Mexican casino and sports business. It signed a commercial partnership with Bitso, and Bitso is a leading financial services group powered by crypto across in Latin America. It operates all across Latin America. So Bitso is providing banking services for the Mexican casino and sports bank business. And then we had results out in for the year in December. That was full year results as 30th of June. Revenues have fallen from 436 to 436,000 from 1.8 billion previously. Reduced losses. The previous year's loss was 3.8 billion, and the loss before tax was just under 1,959,000. But since that time, the company has raised 1.6 million in warrant exercises. So plenty of warrants were issued at the previous raise. So the company at December, just before Christmas last year, had cash at bank of 1.42 million. You then add to this looking forward, the company expects to generate a lot of income from warrant exercises going forward this year, but also the projections for income from the group websites are expected to rise significantly from the numbers reported last year, and we should get a trading update for the current year in the next 3 to 4 weeks. On January 24th, so 3 key directors. Mark Epstein is the CEO, John Barker is the chairman, and you've got a non-exec director, Stefano Loretti, as well. All 3 of them purchased shares at 0.37 pence, and that's Mark Epstein purchased just over 12 million shares at 0.37p. John Barker purchased over just 12.5 million shares at 0.37p, and Stefano Loretti purchased 2.7 million shares at 0.36p. Collectively, Mark Epstein owns 1.74% of the company. John Barker owns 3.46%, and Stefano Loretti now owns 3.5% of the company. So you've got a board there that between them own sort of getting off at 9% of the company, and that's great to see. You know, when you've got a board that have skin in the game like this, then they're investing at the right time. They see real value at that level. So at 0.43p, I think the company's well placed to continue to grow, and I think the market's going to be waiting for that trading update, which will be due in the coming weeks, and then we can really see the progress that's been made since the full year results were announced in December.
Okay, good. So that's, he thinks, the big sort of catalyst potential moment, the results that are upcoming.
Yeah, that's right. Yeah, well, it's not resolved so much. It's just a trade. It'll be a trading
Mm,
update on
okay.
the current year. From a cash flow standpoint, from a funding standpoint, the company has many more warrants that will be exercised during the year. So that will continue to bring cash into the company and continue to fund the operations, and then obviously you'll have the income from the operations, which will get back to that 1.8 million that was turned over the previous year.
Okay. Good. 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 Well, I think the environment for tech is probably, I don't want to say this, but slightly better than the miners, just given, yeah, what's
Yes.
happening, yeah, in the United States. I think any tech crypto stuff is probably more in favor, in flavor, or is it, what do you say, than the miners. So, yeah,
Yeah.
I think tech, yeah, so I say tech should have a good little run. Okay. Well, thank you,
Yeah.
Alan. Thank you very much for your time, as always.
Thank you, Mark.
And
Good
we'll
talk.
speak again next week.
Indeed. Yeah.
Well, welcome back, Dan Flynn, of course, to the Research Talk. Dan, how are you doing?
I'm great, Mark. How about yourself?
Yeah, all good. Thank you. All good. A bit of a flat week, I would say, generally on the markets here. The liquidity still being a little bit tight there, but it is what it is. There's still some, times to perhaps accumulate during this time. Some good value plays there. We talked with Alan about Nostra Terra, of course, getting into cash flow, and upping that cash
Yeah.
flow and looking to then reinvest that cash flow into drilling a new well, and they're cash flow positive, profitable. So and they're still pretty valued, right down at sort of circa just £1.5 million. So then you've got funds like Premier Miton looking for value plays. They've supported both placings, and then they're buying on the market. So
Mm.
I think some of the big boys are looking to position some of these value stocks. So I think now is perhaps the time to be slowly accumulating. And speaking of that, and what perhaps is a bit more favourable than perhaps the miners or the explorers might be, the technology stocks, the crypto stocks, given the
Yeah.
United States and what's going on there. So Coinsilium, I know you want to talk to us a little bit about Coinsilium here, and they've got some new advisors they appointed recently, a couple of big names, I think.
Yeah, absolutely. I think you're right. I think now, when it's a bit quieter, is a time to think about accumulating on the
Mm,
basis that things will go up. So yeah, Coinsilium is one I want to look at this week. I'm a holder, and so just a quick recap: the company's an investor in the Web3 space. It's enjoyed a bit of a valuation uplift alongside Bitcoin and crypto prices since Trump's election. Currently sits at 3.4 pence as of writing, with as of researching, I should say, with a market cap of £7.6 million, having dropped off from above 4.4 pence towards the end of last year. So the last couple of weeks have been interesting for the company. It's doubled down on its commitment to launching uh, a reserve strategy in the crypto space specifically. So towards the end of last month, Coin appointed James Van Straten and Clement Hecko as strategic advisors. Sorry if I've got the pronunciation of that wrong.
mm-hmm.
If Clement's listening. James is a big name in cryptocurrency analysis with a large following on social media, and Clement is a seasoned expert in DeFi and founder of one of Coin's portfolio companies, which is called Tomato. So together, the pair will be helping Coin to shape and enhance its cryptocurrency treasury strategy.
Okay.
And this is the strategy of holding digital assets like Bitcoin and other cryptos in treasury alongside or in place of cash. So it was pioneered by MicroStrategy in the US, and we've all seen how well that's worked against a backdrop of rising Bitcoin prices. That company's got an enormous valuation now. And Coin is looking to, albeit on a small scale, follow in a similar vein. That's at least going to be part of this focus moving forward. So the company is going to work with Van Straten and Hecko to maximize its digital assets holding and explore broader treasury options in the digital assets space. It will also look to extend its insights to other companies, supporting them in the creation of their own treasury management strategies.
Mm-hmm.
And this week, the company doubled down on the commitment with the launch of a dedicated entity for cryptocurrency treasury management called Forza. So we're really seeing the company commit to this strategy, Mark.
So Forza is what their strategy for maximizing the returns, is it?
That's right. I think so. They'll own these digital assets, and then through Forza, they'll look at, which ones to increase their holding of, sell down. And I think it's also where, the sort of hub for offering this advice to other companies.
Okay. And
Yeah.
then the new appointments presumably playing quite a key role in assisting on that strategy.
That seems to be the case. And for me, it seems like a pretty simple value opportunity here. If Coin has more crypto in its treasury, the value of crypto continues to rise, then the value of Coin's reserves will increase, and this should have a positive impact on the company's valuation. So that's on a fundamental level. But beyond that, I think there's a bit of a speculative opportunity here as well. So Coinsilium's historically enjoyed increased buying when the Bitcoin price rises. There's an association between the two, it would seem. And I think this treasury strategy deepens that association in a way. The company has gone on the record saying it wants to store crypto assets in treasury for the long term. This positions it as a way to get exposure to the crypto and the crypto prices while actually having to buy it. And, based on the performance of MicroStrategy, this is certainly something a lot of people are interested in. And having people like Van Straten and Hecko on board with their large profiles, I think it has the potential to put more eyes onto Coin and this opportunity. And so in this sense, the treasury strategy seems to be an amplification of the crypto price proxy opportunity that Coin already presented. And we don't know where crypto price is going to head, but with Trump in office and Bitcoin getting taken more and more seriously as an alternative store of value to fiat cash, the possible combination of rising prices and a rush to buy crypto can indeed be very powerful for early coin backers. I hope so. Anyway, as a holder.
Yeah, indeed. I mean, what project do you think perhaps got the most legs?
Yeah, exactly. And I think that's an important thing to highlight because the company's not just to play on Bitcoin prices. That's just the headline. Coin itself is an investor, advisor, venture builder in Web3. Crypto is just part of Web3. And Web3 stands to be the future of the internet. It's built on blockchains. Proponents think it's going to take the power away from the few conglomerates that control the internet at the moment and back into the hands of people like you and me, Mark, the users. So yeah. So I think the companies that Coin are investing in are the ones driving the way here. I think there's you can see all of the companies in Coin's recent strategic update. But I think the ones like Automato, Yellow Network, and Green Gauge, which are taking sort of innovative approaches to the trading of cryptocurrency and the development of Web3, are the ones that, if they kick off, and they're all approaching sort of product rollouts and increasing their user numbers, if they lead the way in Web3, they stand to add an enormous amount of value to Coin's bottom line. I looked at one price valuation forecast for Web3. It's expected to grow at a CAGR of 43.8% over the coming years, from valuation of 3.7 billion in 2023 to 98.3 billion in 2030. So, the space as a whole is growing. Coin's an early mover. It's getting stakes in these companies that are the most innovative, and not everyone's going to be a hit, but if a couple are, even if just a couple are, then they could become enormous, and Coin and shareholders are going to be the ones who benefit. I think really that's where the real value lies over the long term. I think the crypto treasury and the alignment with the crypto price obviously can provide a lot of upside, but I think zooming out and looking at the Web3 space in general is something that more and more people are going to do moving forward as it becomes a bit more mainstream. I don't think people know about it that much, like the regular man on the street, and have sort of thought about it too much now, but they will have to. It's really, as blockchains become more prevalent due to their security benefits and all the other benefits they offer, I think Web3 is really going to take off.
Yeah. So with Coin, the sort of the investment case really is, of course, the management of that treasury asset, and they'll get more treasuries into, or securities, whatever you want to call it, tokens into that treasury as the projects that they're advising on and working with start to effectively vest, as they say.
Yeah, I think that's the plan, because
Yeah.
they're obviously going to want to, these holdings, they're going to want to cash in at least some of them at some point
Mm-hmm.
once they become more valuable. And the idea of a crypto treasury presumably is not to hold all of that value in cash, but
Yeah.
to generate more upside from it by holding it in whatever crypto they choose, be it Bitcoin or something else.
Yeah. Indeed. Indeed.
Mm.
Okay. Good. Well, hopefully the environment for the cryptos is favourable, and Coin can go on and well, we see how Coin has reacted in the in previous bull crypto cycles. You know, they've done very well, and of course, every iteration, let's say, of that, they've got effectively more and more in their portfolio. So
Yeah,
one would,
exactly.
sort of hope that, and logic would say that in this swing they're even better positioned than they were in previous cycles to benefit. So thank you, Dan. We keep an eye on Coinsilium quite a lot. There's not so many crypto plays in the UK that you can get exposure to, but Coin is definitely very active in that space, as Valerium, for example, as well. Also Binance, but very much more of a simpler model, is mining and holding Bitcoin effectively. But anyway, thank you for that. So we're going to now talk about a miner. We're going to talk about Kefi. Is that how you say it? Kefi?
Yeah, Kefi, gold and copper.
Yeah, okay. Well,
Yeah.
gold doing very well, isn't it?
Yeah, exactly. It seems timely, right? We were just
Mm.
talking before, weren't we? Gold's having well, it's the run didn't really stop, did it? It's just
Yeah,
slowed a bit, and now it's picking up again.
exactly. Yeah,
With the
it's doing
trade
well.
wars. Yeah,
Yeah.
yeah. So I wanted to cover Kefi, gold, and copper quickly. So the company released an update on Tuesday on the funding for its flagship Tulu Kapi gold project in Ethiopia. So the secured lenders for the project recently expanded financing facilities from 190 million to 240 million. And this brings the total size of its development finance package for the project to 320 million, with Kefi's beneficial interest remaining at 80%. So this week, the company said the formalities of confirmations for the financing are now underway, and that the final definitive documentation is on track to be ready for signing by end March 2025. So if we just take a step back and look at why that's important.
Mm-hmm.
So those familiar with Kefi and Tulu Kapi don't need me to bang on too much about the significance of this project, but just to say on the top level, it's got a mineral resource estimated at 20.2 million tons at 2.65 grams per ton gold for 1.72 million ounces. It has, I think on the presentation said, a potential for another million ounces at depth and potentially even more than that. The NPV of the project per Kefi's share in issue stands at 15 pence per share at 2,800 an ounce gold, whereas Kefi's current share price, when I last looked, was 0.5 pence. So in terms of actually realizing this value, Kefi's planning to rapidly construct an open pit mine targeting initial gold production of 135,000 ounces per annum, with subsequent lift to 179,000 ounces per annum from like an initial underground contribution. It expects net cash flow over the first 8 years of production to total $1.5 billion.
Okay.
And that's at 2,600 gold. So, these figures are all huge. The amount of money it's putting into developing this is huge. The amount of money it expects to generate means it can pay this off if everything goes to plan. So, as you can see, all of those figures are huge. The project's advanced, development plans are in place, serious funding partners are all but secured. In effect, all that really stands in the way of Kefi starting to realize the value is finalizing this finance needing for development. So with that in mind, you'd expect this week's news that the financing is closing and expected to be ready for signing in March to be warmly received, wouldn't you?
Mm.
Yeah.
And it wasn't?
Not Kind of. It didn't. The stock didn't go down, but it didn't really go up much either. So I'm new to Kefi. It came on my radar a few weeks ago, and this week's development led me to take a bit more of a look at it. And there's an enormous amount of commentary online about the update. And what seems to be the issue and the reason for the share price sort of staying where it is investors are a bit on the fence due to repeated delays in finalizing the financing in the past, and certainty around exactly what government ratification is and how long it will take. That's one of the things that's needed before the financing is sorted. And another criticism is a lack of buying by directors at current levels, which
Okay.
people are interpreting as a lack of confidence in this actually happening. So I think the message from the market at the moment really seems to be, thanks for the update on the financing, but we'll believe it when we see it, when it actually crosses the line.
Okay.
And that to me is interesting because when you think about the size of Tulu Kafi and the other projects in Kefi's portfolio, which perhaps we can cover in a future episode, there's a strong argument to be made that it's significantly undervalued at 37.8 million, which was its market cap when I was researching. So that undervaluation is only an undervaluation if it's contingent on the company actually getting this funding over the line so it can realize some value from the project. So if you take Kefi at its word and assume it will deliver in March, sorry, it does make you wonder whether there's an opportunity for a significant re-rate once everything becomes a bit more concrete and real. If that's the case, then now could be a good entry point while the company remains depressed, I guess you could call it. Especially, like we said, with gold only seeming to get stronger as time goes on. So for that reason, I've added Kefi to my watch list. I'm going to do a bit more research over the coming weeks and months so perhaps we can do a bit more of a deep dive. But I just think at the moment it's being held back by sort of skepticism, and if the company can prove those doubters wrong, then you might quickly see some buying pick up because this is a big project and it's far along, and the financing is in place. It's not over the line, but it's in place. And those are the hurdles to these sorts of projects usually, aren't they? And
Yeah.
I've seen projects that are less far along with larger market caps than 37.8 million pounds. So I don't know, Mark. I think it could be a good one to look at.
I think it's definitely one we should keep an eye on, and like you say, perhaps
Yeah.
do a bit of a deeper dive on it. But with revenues they're predicted of 1.5 billion. I mean,
Yeah, that was
huge
the cash flow. Yeah, the
cash flow. Sorry, yeah.
net cash flow over the first 8 years of production. So
Yeah.
long period, but it's also a huge amount of money, isn't it?
Yeah, it is. It is. Yeah,
Yeah.
and you're getting that for basically, 40 million at the moment. I mean, miners are just not in flavour, are they? You've got
No.
other companies that are valued around that level, but they're not perhaps miners. They're more maybe tech companies who have a little bit of revenue or indeed no revenue. But I think miners are just not getting, the kind of love they deserve. And given gold where it is at the moment, why that isn't encouraging people to or investors to stick money in gold. I'm not gold stocks, particularly ones that are advanced, like it sounds like Kefi is. That I'm not sure why. I think maybe it's just there's
Yeah.
not been any wins on the market for a long time. There's been more losses. I think probably a lot of capital. People are suffering still. It'll take a while for that to build back up. Maybe people are a bit gun shy, perhaps, and you consider the general, I think, feelings just in the world where things are feeling a little bit tight, lack of optimism, etc., could all be playing into it. But as I said at the start, you've got the funds with the money who are positioning in some of these stocks at the moment.
Yeah, exactly. Yeah, and I
So
think with you do wonder when the optimism around gold will trickle down to the smaller companies. And I was looking on Twitter earlier, and someone was commented that it's because a lot of these projects won't, be in production for donkey's years. But I mean, I don't know if that's valid because that doesn't mean that they're not needed, does it? And and then going back to Kefi, like this is a company that doesn't need all of those years. Like as far as I'm aware, I think they could describe it as shovel ready. So
right, yeah,
like I don't know. You're right. It must just be to do with general malaise in the market, and these stories that once excited people currently not landing due to general pessimism.
Yeah. But
Mm,
that will change at some point. It has to change.
absolutely.
And,
Yeah.
gold is, I think I've seen a few comments from some economists on X there. The gold is always front runs liquidity. So I think, what we can almost guarantee is more liquidity, more QE. And ultimately that does end up finding its way to equities. And I think that's probably what's going to happen. I don't think there's any way. Although the big cuts that Elon and Trump are doing are going to help, really, you've got to have a bit of inflation to get rid of some of that debt because it's just incredibly high.
Exactly.
And to be honest, I think, I don't know, it depends how long people can want to put up with what they're basically seeing in government. We either, it builds up to revolution and then they decide to make us all feel better by printing some more money or something. I don't know.
Yeah, exactly. Yeah.
I don't know.
Whether or not it works is a different story, isn't it?
Exactly. Yeah. But anyway, thank you for putting that on the radar, Dan. That's good to have that on the watch list. Keep
Pleasure.
an eye on it. But thank you very much.
Thanks, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.